Hello and welcome to the Business Standard Morning Show. I'm Binu Sandhu. It's the 17th of November 2023 and here are the questions we will be answering today. Should the government regulate what you watch on Netflix? Does Punjab need a new crop mix? Is it time to bet on Newage stocks? And why is Pakistan deporting Afghan refugees? The Indian digital media is once again on the brink of government scrutiny. The Draft Broadcasting Services Bill aims to bring cable TV and OTTs under a single regulatory framework. This can potentially stifle content innovation and autonomy. Kasturi Akhil asks experts if the government can regulate what you watch online.
The Information and Broadcasting Ministry has come up with a proposal to scrap the Cable Television Networks Act of 1995 in order to extend its oversight to digital broadcasting services, including over-the-top platforms. The ministry floated the Draft Broadcasting Services Regulation Bill 2023 on November 10 and has invited feedback and comments from stakeholders within 30 days. The bill seeks to update the broadcasting sector's regulatory framework in line with emerging technological advancements. INB Minister Anurag Thakur said the pivotal legislation will help replace outdated acts, rules, and guidelines and adapt to the dynamic world of OTT, digital media, DTH, IPTV, and more. OTT platforms are currently regulated under the IT Act 2000, and much like the introduction of IT rules in 2021, the new draft broadcasting bill has once again raised concerns about increased scrutiny of streaming platforms like Netflix, Amazon Prime Video, and digital news platforms, among others, by the Government of India. The bill proposes a Content Evaluation Committee or CEC, which will act as a self-certification body to certify content of broadcasters. The bill indicates that the government may prescribe the number of members in the CEC, the quorum required, and other such details to ensure smooth functioning. There will also be a government-appointed Broadcast Advisory Council, which will advise the government on orders to be issued in case of violation of the program code or advertisement code.
Now, this Content Evaluation Committee is more like a self-regulatory body. However, the interesting part is that on top of this, you have the Broadcasting Advisory Council. And this would be a government body. This is going to be nominated. The members of it will be government employees. They'll be nominated by the government. So all of this framework of self-regulation that we are seeing will essentially also come under the ambit of the Broadcasting Advisory Council. So to what extent it's actually self-regulation and to what extent we'll have to abide by the government's conformities as to what they believe is the correct streaming criteria, that I think remains to be seen. So for the OTTs, this is certainly a new challenge.
The bill introduces a differentiated approach for program and advertisement codes across various broadcasting services. It mandates stringent access controls for restricted content. Any breach of the codes will necessitate the broadcaster or network operator to take corrective actions, including modifying or deleting the program, issuing a censor, or paying a penalty. Speaking of penalty, the government has framed the penalty structure that commensurates with the size of the company that fails to comply with the provisions of the bill. The maximum penalty prescribed is 50 crore rupees. Experts say imposing cable TV-like regulations on streaming platforms could hinder audience experience and thereby the growth of OTT platforms, especially at a time when the revenue of the Indian OTT market is seen doubling to $3.5 billion by 2027 from $1.8 billion in 2022, according to a PwC report.
One of the things that I can't quite understand is how online streaming services, or OTT as they're being called, are being made a part of a broadcast bill, because broadcast is communication to the public. It is communication from one source of information to many people at the same time. And online streaming services are essentially one-to-one. So when we, for example, view an online streaming services, there's a specific stream that's being sent to you or me individually based on what we have chosen to view. Secondly, for online platforms, it is pull-based content. It is something that we choose from a selection of options that we have in terms of content. So it's not that it's a broadcast medium like television where we don't have a choice over what is being shown on screen. So we might inadvertently be subjected to content which is perhaps not of a type of content that should be communicated to the public.
Experts argue that imposing rigorous program and advertisement codes could result in content censorship on OTT platforms, hampering content innovation and autonomy. They call for clear guidelines on online content codes to eliminate subjective interpretation.
Like the previous attempts, the new self-regulation for on-demand video streaming platforms is also being viewed with skepticism in light of increasing censorship, and they suggest that the proposed bill needs cautious examination. Meanwhile, issues such as stubble burning and groundwater depletion have fueled intense debates in Punjab. Fingers have been pointed at paddy cultivation in the state, prompting the Supreme Court to propose phasing out paddy in favour of less water-intensive crops. Today's special report by Tariq Ahmed attempts to answer if Punjab needs a new crop mix.
The Supreme Court last week pulled up the centre and the Punjab state government on the worsening air quality in Delhi. The SC directed both the governments to take immediate actions to curb the stubble burning menace. The Supreme Court stressed that the paddy cultivation, which is responsible for the stubble burning incident and groundwater depletion in Punjab, has to be phased out and replaced with alternative crops. Currently, Punjab is the third largest producer of rice in India. It is responsible for around 10% of overall rice production in the country, and around 20% of Punjab's total rice contribution is coming from basmati varieties. But for a water-intensive crop like rice, Punjab does not get enough rain and relies heavily on irrigation. For irrigating the paddy fields, farmers in Punjab rely on the groundwater. The state government has made electricity free for farmers since 1997, and this has accelerated the groundwater exploitation. Groundwater levels are depleting, and presently 80% of Punjab is in the red zone. Land under paddy cultivation has also been increasing in the state. During the 1960-61 Kharif season, Punjab had only 0.2 million hectares of land under paddy cultivation. In 2023, this number is close to 3.2 million hectares during the Kharif season. To address groundwater depletion, the Punjab government enacted the 2009 Preservation of Subsoil and Water Act, mandating that paddy cultivation begins after May 10 and transplanted after June 10. The idea is to reduce water usage during the critical evaporation phase. However, this approach led to the problem of severe air pollution. Delays in sowing, transplantation, and harvesting left farmers with limited time to prepare the land for wheat cultivation. Farmers resorted to stubble burning as a faster and cost-effective way to clear the fields of paddy straw. As per the Decision Support System for Air Quality Management in Delhi, biomass burning, which is mainly stubble burning, was responsible for 37.85% of the air pollution in the national capital on November 7th. Considering the severe air quality in Delhi for consecutive days, the Supreme Court expressed concerns over raging farm fires in Punjab and proposed phasing out the paddy cultivation in the state. The Apex Court also asked the government to explore minimum support price or MSPs for alternative crops to incentivize farmers. Does this mean a new crop mix is imperative for Punjab now?
Does Punjab need a new crop mix? Definitely. Absolutely, Punjab very urgently, and it is high time, and I think the time has even over. It is just an emergency situation that Punjab does need a very new crop mix. And Punjab is probably the only state in the country which has the potential to adopt any new change, and the potential and the acceptability of change in Punjab is far higher than any other place in the country. Reason being, the agriculture is deep rooted in Punjab, and Punjab's basic and Punjab's strength is agriculture. People there are very open to adapting changes, and the farmers there are very hard working. They can create gold out of anything.
Experts suggest that paddy needs to be replaced with less water-intensive crops like oilseeds, maize, pulses, and millets. But MSP alone cannot motivate farmers to shift into the alternate crops.
But it is not price alone, because shifting cropping patterns, it's the rate of return. So rate of return is yield versus yield and price together. So if yields are lower, then your return will be lower. So both technology, the varieties which produce the yields, and also the price, and also procurement, because rice and wheat major procurement is done, although we have for pulses and others a little bit procurement now, and oil seeds. But we need to have a major way assure the farmers that they will get the right price, because right now, the minimum support prices are there for oil seeds, pulses, but procurement is very low.
Experts have also pointed out that less water-intensive varieties of basmati can be an alternative to the other paddy varieties, as its straw can be utilized as animal fodder. But basmati is a variety that is difficult to grow on a large scale. Heavy reliance on pesticides and the alternate cycle of wheat and rice cultivation have been affecting paddy yields in Punjab. This makes a new crop mix crucial for the region.
On one hand, you are giving an MSP which is arbitrary. You're buying at a cost which is 42-46% more than the cost that you are paying to the farmers today, and then you're selling at a free price. So obviously, if you pay such a higher amount, which is higher than the other competing crops, no sensible farmer would like to shift to a crop which pays him less. So he will stick with paddy and wheat, and the whole thing will again crumble, which has been happening for 70-60 years so far. So the entire dynamics need to be reworked. The entire dynamics, and somebody has to come up and say, boss, this needs to be reworked very urgently, very quickly. Otherwise, the whole system will collapse one day.
Transitioning to less water-intensive crops is imperative for Punjab to address the issue of groundwater depletion. This shift can also mitigate stubble burning incidents and contribute to soil rejuvenation. For this, it is important to enhance procurements of alternative crops at higher minimum support prices and provide subsidies to farmers.
Looks like phasing out paddy cultivation with other crops in Punjab can be a possible remedy to tackle air pollution in North India. Moving on to markets, shares of Newage companies are on a tear. Over the past 3 months, these stocks have rallied between 5 and 30% on the bourses as against a 1% rise in the benchmark indices. Nikita Vasisht spoke to experts to decode the drivers of the rally in the stocks of Newage companies and assess if they are a good investment bet at current levels. Watch this report.
Shares of new age companies have been in vogue on the bourses for some time now. Over the past 3 months, new age stocks have outperformed the markets, led by a near 30% surge in shares of Zomato. By comparison, the Nifty 50 index is up just 1% during the period. The new lease of life, analysts say, is a result of company managements shifting their focus on profitability.
When these IPOs hit the market, it was a divided house on valuations. One school of thought was that these are high growth stocks, so can't be valued using the traditional valuation techniques, whereas the old school was still looking for cash flows. The old school finally prevailed, and the managements of these listed Newage companies had to have clear timelines for profitability and needed to meet the milestones on a quarterly basis. Those which showed the inclination and were able to match up have been acknowledged, and this reflects in the stock prices in the last couple of months.
During the September quarter of FY24, FSN E-commerce Ventures, the parent of Nykaa, reported a 50% year-on-year surge in net profit. This comes after it had reported a mere 8% year-on-year rise in net profit in Q1 FY24, but a fall of 72% in the fourth quarter of FY23 and 68% in the third quarter of FY23. Food delivery platform Zomato, meanwhile, delivered its second quarterly net profit worth Rs 36 crore in second quarter FY24. Paytm, on the other hand, has been narrowing its losses consistently while improving EBITDA gains quarter on quarter. The strengthening bottom lines, along with stable profit margins, are thus acting as tailwinds for the companies. That apart, a favorable interest rate scenario too is auguring well for these stocks as new age companies use discounted cash flows to value their firms, which is a function of interest rates.
Every time the internet stocks start rallying aggressively, whenever the interest rates start falling, because they are a function of demand, and demand is spurred by reducing interest rates. Along with the pickup in demand, it also affects the valuations, which are based on the DCF methodology. And what happens is that when you are doing the DCF methodology of valuation, the interest rate which is used to discount the future, as it falls, it raises the fair value of the net present value of the stock price.
That said, analysts suggest investors selectively buy new age stocks on dips.
Now, will all the stocks rally? I think it's going to be a mixed bag. Zomato, in my opinion, is a clear beneficiary, and Honasa is another stock that we think will go up against the market expectations. And Jio has a very, very strong balance sheet, which currently Paytm does not have. Also, Paytm Bank's operations have been kind of curtailed by the RBI, given the existence of a Chinese stake in the company.
The sentiment around shares of new age companies is on the mend. From broad-based sell calls, analysts are giving thumbs up to these companies as they have shifted their focus on sustainable profits. But they suggest investors wait for dips to enter the counters. Today, on the 17th of November, global cues and stock-specific action will guide the markets.
He's making plans for an early retirement. Business Standard.
New age companies certainly have a promising future on the Indian stock exchanges. The same cannot be said for Afghan refugees in Pakistan who are facing an uncertain future. The Pakistani government's decision to expel 1.6 million undocumented Afghans from its territory has created a humanitarian crisis along its western borders. But why is Pakistan deporting Afghan refugees? Tariq Ahmed finds out.
Mud houses are being raised, queues of trucks carrying domestic goods, and more than 100,000 people homeless. That's the scene now at Afghan Pak border along Khyber Pakhtunkhwa. The homeless people you see on screen are Afghan asylum seekers who are being forced to leave Pakistan. The humanitarian situation was triggered after Pakistan's interim Interior Minister Sarfaraz Bugti issued an October 31st deadline for all illegal refugees and migrants to leave the country, citing security reasons. The refugees were given 28 days' notice. Reports suggest that Pakistan police have been going around the localities in Azakhail town of Nowshera to check papers of people. According to the Pakistan government, the country is home to more than 4 million Afghan migrants and refugees, about 1.7 million of them undocumented. It says that only 2.2 million Afghans have enough papers to stay in Pakistan. Consequently, the remaining 1.6 million Afghans are undocumented and supposed to leave Pakistan before the deadline. According to local media reports, over 1 lakh Afghans have already left Pakistan before 31st October through border crossings. Official reports say this number is 2 lakh. The Pakistan government has cited security reasons and better welfare of Pakistani citizens as the reasons for expelling illegal migrants. The country has seen a surge in violence this year, most of them occurring in the northwestern province of Khyber Pakhtunkhwa and the southwestern province of Balochistan. Both the provinces bordering Afghanistan are home to 74% Afghan refugees, according to the United Nations High Commissioner for Refugees. The government attributes the rise in terrorism to the alleged support by Afghan Taliban for Tehreek-e-Taliban Pakistan, or TTP. Caretaker Interior Minister Sarfaraz Bugti claims that Afghan nationals were responsible for 14 out of 25 suicide bombings this year alone. Refugees started arriving in Pakistan in 1979 after the Soviet invasion. Over 3 million Afghans migrated during that period, with many eventually returning home. The US invasion of Afghanistan following 9/11 led to a second wave of migration. Following the fall of Kabul to the Taliban in 2021 after US withdrawal, reports indicate that more than 6 lakh Afghans have migrated to Pakistan. Pakistan hasn't announced any plans about how to deport undocumented people yet. The 2,640-kilometer-long Pakistan-Afghanistan border that passes through rugged mountains, forests, and narrow rocky passages now pose a major challenge for cross-border movements of people between both the countries.
I will achieve, I will fly high.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
That's all that we have for you today. For more news and analysis, please log into our website, business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.